All right, it's showtime. Welcome, everybody, to the Crypto Mining Tools podcast. And today we have Kevin Shaw with us. Here's our co-host, Ethan Zerka.
Hi, everybody. Ethan here, and Kevin is down there.
Down there. Hey, Kevin.
They're up there.
How are you doing?
Good. You hit the mark. Perfect.
Yes, I did.
So, so first, I'd like to start off. Kevin, you and I met in Vegas, and what was that? That was a Bitcoin conference in Vegas, and you had just some fascinating knowledge to share with me while I was in Vegas. So I'm really excited to have you as a guest on the show. And I'm gonna let Scott start with the first question, then I'm gonna rip into you.
Yeah.
Okay.
Yeah. So Kevin, you were telling us previously about just your experience in doing the research and trying to find some power and some land for your own project. And so we found that really interesting as a story, and then also combined with your experience in the tax world and what you've done as a profession for the last umpteen years. Longer than a lot of us have actually had careers. So we just really wanted to have you on the show, and we think that you have some good, interesting advice and stories to tell. So why don't you just tell us a little bit about yourself first, and then we can talk about mining.
Okay. For the first 15 years of my life, I was in retail and restaurant management.
Okay.
During that time frame, I helped open up over 50 different businesses, from the ground up. Sometimes it was from the lease level, sometimes it was after the lease was done, bringing in the equipment and doing that type of stuff. So I have a lot of knowledge and experience, with negotiating the contracts, the leases, finding the equipment and finding good prices on stuff. Then, during that same time frame, I was going to school and everything else. I graduated. I got a job at the state of California where, I've utilized, and my profession in general is accounting and taxes. So I gained a unique knowledge of taxes and what can be done and that type of stuff during that process. And that I've been doing that for a little over 17 years now. And, when it comes down to crypto and stuff, I got interested at the very, when Bitcoin hit that 20,000 mark. It's
oh wow, from the peak.
When it was really big and everything else, and I'm like, okay, how do when I did research before, I thought Bitcoin was a Ponzi scheme, right? You had a whole bunch of multimillionaires, and it just seemed too good to be true, and then I started doing some more research, and I realized that there was more to it than what I originally had thought, like a year or two earlier. And, so I started off and said, okay, how can I get into this? So I bought some GPU cards and built my own rigs and, was going to mine. Ethereum was, I could make around $400 a month, mining Ethereum and everything else. But at the same time, I could sell those rigs to make $2,500 each. So,
Sure.
I looked at the stuff and said, $400 a month per rig, or $2,500 for each rig. So I ended up, I mined on them a little bit, made sure that they worked, and they were optimized and that type of stuff. And then I sold them because it made more sense. I mean, it was a better business model, and it's and that's how I looked at this stuff. And at the same time frame, ASICs were really big, right? So the S9s were making tremendous money and everything else. So I'm like, okay, everybody says ASICs are noisy, they're super hot. What to do? So I started calling around and saying, okay, let's try hosting and co-locating. And so I found a whole bunch of places, regular traditional data centers and that type of stuff. And they were wanting $150 per month per S9. Now I'm here looking at this stuff and saying, oh, great. So $150 to them. I make $170 total, so I can make $20 a piece. There has to be a better way. It doesn't, that just seems outrageous. So, that's when I kind of started my search for cheap power and went through many things. And, I've my ex-wife's from China, so I spent, 8 trips over there. I got a lot of contacts in the manufacturing world over there and in shipping world and that type of stuff. And I still maintain most of those contacts, 10, 15 years later. And the thing that I learned is if you can sell, you can make better money. It makes better business sense. You just have to, one, have the money, to be patient. I mean, it's cheaper to ship it over by sea than it is to ship it over by air.
Oh yeah, absolutely.
And that can make a big difference. So planning out your projects in advance and that type of stuff is important. And so when I first started out, I found 5-cent power in Montana, and but the process to get that power is you had to pick a location, and then you had to pay $25,000 for a study, and then you had to pay another $25,000 for a study. And the study, since you were like 200th in line, is going to take 6 to 9 months to even get a result on the study to the location that you picked. Will it work? And most people aren't that patient. I'm not. I don't know about you guys.
Well,
sure.
And tell us about this study. You said you had to get a study, or is that a step that you wanted to do?
No, you had to. It was required by the power company and the city and the county.
Is that an environmental impact, or what kind of?
It was more of a grid load study to make sure that the grid can handle it, and the substation that's close to it can be expanded to handle this stuff. So it was a more of a study for that, looking at the future use of the power and that type of stuff, how it's going to impact the community, and you had to say, this is what load I wanted. I would expect, I want to grow to this. And they consider all those things. And then, you're either going to get a yes or a no, up to a year later, whether the site you picked out can handle any of that stuff or not.
So there was a lot of variables involved with it. It wasn't
right,
a straightforward, capex situation where you just build out the infrastructure and then you can utilize it. You had to consider how that infrastructure fit in as a piece of the puzzle of everything else.
Right, to the community that is involved in. And so, and you still have to do that now. I mean, unless if you're in, you're in a stranded gas situation, or there's excess power, or a multitude of other things, but you still have to consider some of that stuff. I mean, you can have land right next to a substation, but if there's 1 megawatt available on that substation, what is it going to cost to expand? Is the utility going to expand it? Are they going to ask you to put up the money to expand it? What is that process? What is it going to look like? And asking the questions is the important part of it.
Yeah. So we get a lot of people saying, hey, I want 5 megawatts and I want it for 2 cents. And so and they want their miners up and running next month.
Right. And I want to retire in 2 years. So
that's common. I mean, everybody wants that, and even the larger companies want cheap power, but then they want to throw wrinkles into the deals. And there's certain things. Communication is important in anything we do. When we're dealing with the city, a county, utility, other people, the communication thing, and that's where a lot of deals fail, because the people in the city will get lazy and not call you back. You need to be very active and be calling them and keeping in touch with them. You have to ask the right questions. You have to do that type of stuff. And, I've seen somebody say, hey, I want, 100 megawatts and we want to pay, 2.5 cents. Great. But then these guys have the nerve to go through and be even funnier and say, we want to be able to cancel the deal, because they were going to have to sign a power purchase agreement. We want to be able to cancel the deal within 60 days. How many people on the other side that are going to try to provide the power and give you a good price going to do that? And pretty much nobody will. So, it just killed the deal right there. But, people think things, whatever they want to do, it's always about them, and it's not about making a win-win situation for everybody involved.
Absolutely.
And that's the biggest thing. I mean, 2 cent power is doable. even sub 3 cent power is doable, and it can happen. But there's a couple things that it takes to get you there. So the first thing is money. The second thing that you have to do is, one, not be greedy. Make sure that there's enough, on the bone for everybody to make money. Volume is very important. If you're 5 megawatts, you're not going to get sub 3 power in most cases. Now if you decided to be unique and say, okay, let me get 300 1 megawatt guys together, and we're going to form a cooperative. And now we have the ability to buy 300 megawatts of power. Okay. That group can get a better rate than somebody wanting a megawatt or 5 megawatts or 10 megawatts or 50 megawatts because they're a big group. But most people are so out for themselves and they only care about themselves that it's really hard for stuff like to do that. I mean, you got the dairy farmers that do cooperatives. You have, a whole bunch of other farmers that do cooperatives, and they do it because it makes more money for everybody because it drives the cost down. Everybody benefits in those situations. Right. But everybody trying to make their own money, and they don't care about other people, and they try to keep it hush hush. It's like it's some sort of secret sauce that, if they tell you they're gonna, you're gonna put them out of business. And a Bitcoin miner is gonna be hard to put another Bitcoin miner out of business. It just doesn't work like that.
So can you paint a picture for us? Because everybody talks about this holy grail of 2 cent power, and how paint the picture. How does it happen? How can this be achieved?
So 2 cent power is done one of two ways typically. Okay. You have to put up the capex cost to do it.
What are we talking about? Are we talking
generation? If you're doing power generation, right? So a friend of mine up in Canada in Alberta, who's with Orion Power Solutions, basically he was a former power company exec. He was a VP of commercial power. He decided to negotiate a lease for gas. And so he has a gas lease. He can operate on the property. He went out and bought the generator. He bought one of the digital shovel, 600 containers. He put that on the thing, mashed it up, brought in the miners. And so he has a site up and running. And up in Alberta is unique because if you're under a megawatt of power, you don't have any government approval. So you don't have any government regulations that you have to go through.
Wow. So
it's something that he could start with little time. But it did take a lot of money, and he's sitting at around 2.5 cents US power cost just for the gas and the maintenance and that type of stuff. So I mean, you basically have to come up with the capex cost to do that. The only other way to do that to get good cheap power is it's unique because you have to build a substation from the transmission side. And not from the primary power side. So, and those are usually 500 kilovolts or, 350 kilovolts. They're very high powered. So you have to start off at a high power and drop it down.
Oh yeah, absolutely.
And a lot of times that can drop a half a cent off your power cost, which is a huge thing. I mean, if the market in the state is 2.5 cents, and now you can drop a half a cent off that, you're at much cheaper rate.
Yeah.
Because that's pretty big. You still will have some transmission charges and delivery charges and taxes depending on the state that you're in. But I mean, you have to go at that transmission line voltage and build a substation. So you're going to have an upfront thing.
Sure.
I saw numbers on a large project, scale project, and an example would be 100 megawatts would cost between 60 and 65 $1 million to build out from getting the
capital
turbines.
expense just to get to it.
Right. Just to get to that power. Yeah, and depending on, because everything comes down to the gas contract you can get.
Mm-hmm.
So the more gas you use, the cheaper price you can get it for. The
Mm-hmm.
less gas you use, the more expensive you're going to get it for.
Mm-hmm.
So it's truly an economies of scale. And once you start getting up in there, like your maintenance cost goes down because it's all in one location, and you can do things that way. And the same thing with when you're doing the substation, because you own the substation, you get other discounts and that type of stuff. And then certain places have, I guess you would call them rebates,
Mm-hmm.
that you buy into. And, some of the rebates are, up to like 1.4 cents a kilowatt reduction, because the grid can turn you off at any time.
Sure.
But that has to be built into it. Some of them are small as 0.2 of a cent. But definitely take advantage of those. But most people don't know that they exist.
Mm-hmm.
That's one of the issues, is because they don't know what exists, right? That they don't know what's out there. That's what the big guys find out about. They do the research. They understand that.
Sure.
And that's the thing. I mean, it's out there. It exists. I've seen, an example is up in Newfoundland. If you're one of the lucky few, you can get power for 1.5 cents a kilowatt.
Wow.
There's a 2-year waiting list,
Mm-hmm.
but you can get power at 1.5 cents a kilowatt. It's a fabulous price, and so it's possible in small pockets, if you get lucky, if you find a producer.
Mm-hmm.
I think the other area that's not yet tapped is being behind the fence at a power company.
Mm-hmm.
A lot of people talk about power companies are starting to do this and that type of stuff. But, most of the projects I've seen, it's not about the greed. It's they're going out and raising the money someplace else. Okay.
Sure.
So they're going to want to make as much money as they can. And if they see the market's at 4 cents, they're going to try to get it at 3, they're trying to get it for 3.5 cents. It wouldn't matter even if it was free to them, right? They're still going to turn around and sell it for 3.5 cents.
Yeah, absolutely.
There's some flexibility in that, of course, and you might be able to get a better price, if you have the financials, if you have all the other stuff to back it up and the volume, you might be able to negotiate a better price, but you really need to know what their cost structures are in order to be able to get a better price.
Mm-hmm. Sure. We have a user here, Captain Crypto 33 says, so, once you know your location and your approximate cost of electricity, what would be the next step, or what would you recommend as the next step, Kevin?
Even before you do that, I mean, here's some things. This is a business, and you should really treat it as a business. Most people, how they pick stuff out is, I live here, what's in my area?
Mm-hmm.
Okay. That doesn't necessarily mean it's the best deal for them. It doesn't mean it's the greatest, the most advantageous for them,
Mm-hmm.
So, I mean, the first thing is do the homework on the business, make sure that you have talked to the local governments, have talked to the utilities, have done that much stuff. Because a lot of times, if you talk to the local government, they'll help you find land. And a lot of times,
mm-hmm.
it's probably better off to buy land next to a substation than it is to buy an existing building or a warehouse that,
mm-hmm.
That's next to a substation, because it's probably going to cost you more to redo that existing warehouse
instead of just starting from scratch.
And so that's one thing. I would say put together a business plan. I mean, how you want to do, what you want to do in the future, how you want to grow, and that type of stuff. It doesn't have to be an extensive business plan, but you have to say, I want to have 150 S9s, or I want to have 150 S17s. After the halving, my income is going to do this.
Mm-hmm.
During the meantime, my plan is 75% of what I'm going to earn, I'm putting back into the business, 25% I'm going to hold it as a reserve, to do the things I need to do. And it's that's just one aspect. But then the other thing is you should after those first two things, you need to make sure you have your money lined up. A lot of people start a business with not having enough funding.
Sure.
Okay. And so that's why across the US, most businesses fail within 2 years. They didn't have enough money. They didn't expect to run into this situation or that situation. Crypto, it's the same way as any other business. There's going to be unexpected expenses and costs and things that you don't really think about. But the more you think this stuff out, the more help you get, the better you're going to be prepared for it. Then, seek out professional help. Seek out people for taxes and accounting and, business help if you're not that strong in business. And, check with Power and other consultings and other professionals. But I'll tell you now, not all of these people have the same knowledge and experience.
Sure.
So if you have somebody that, only, but there's a whole bunch of other things that they don't know, but they don't know them. So, contact multiple people, talk to multiple people, do your own research. When they tell you X, verify that that's true. Most of the stuff is on the internet. It's not hard if somebody says, oh yeah, your goal is not to have to pay any taxes. That's everybody's goal. The top 100 companies in the US do a very good job at it. But
look at Amazon, right?
Exactly. They're paying a lot of money to other people to do that. They're not trying to do that themselves. They don't just wake up one day and like, I don't think I want to pay taxes today. No more. No, they hire professionals. They hire accounting firms, the big four. They hire consultants and they say, okay, how can we pay less tax?
And then they create a structured system. Yeah.
What way to structure this?
Yeah.
And you as a small business should do something similar, but obviously you're not going to spend the type of money that a Fortune 100 or a Fortune 500 company spends trying to do the same thing. But definitely seek out the help, but seek it out from multiple people. Find out the people that are true experts, the people that really know their stuff and that type of stuff. Then the other thing that you should figure out is what type of business structure you want, right? The business structure can be really important, especially for taxes. A corporation is one of the things I prefer because it's a separate legal entity and all the money sits in that corporation. If you don't want to get any money from it, you just leave it there and you can invest it and do other things like that. But if you're an S corporation or you're a partnership or an LLC or your sole proprietorship, every dime that business makes and earns and every expense flows through to you. So even though you're reinvesting it, you could end up in a situation where you owe taxes on $100,000 or $200,000 or even $1 million, on your personal income tax, and all your money's tied up in the business. So you have to figure out, oh shoot, how do I come up with the money?
How's that going to happen? Kevin, this is absolutely fascinating, but I have to pause you just for a second here because I want to give a shout out to our sponsor, NovaBlock. NovaBlock is they're a newish company. They've only been around for about a half a year or so, and they believe as mining and the hash rate is shifting away from China to North America, they want to be a leader, and the way they want to get there is by giving greater transparency than all of the other pools out there. Scott right here is now going to share with you guys how to get a good deal from them. I also want to remind everybody, especially, since you're listening to this podcast, if you have a lot of hash rate, you're dealing with, these big power situations that Kevin's been talking about, make sure you either talk to myself or Scott or even NovaBlock. Let them know that, you want to connect with their pool and you can even get a better rate than what we can offer.
Yeah. So if you go to novablock.com, that's their website. And if you click the sign up button in the top right hand corner, you'll see this form. And if you just enter OFFORD18, that's going to actually give you a reduced pool fee down to 1.8%. So that's invitation code offered 18. So give them a try. And thank you, NovaBlock, for sponsoring our podcast today.
Awesome. Thank you, NovaBlock. All right, Kevin, let's get back into this because you have just, given us some phenomenal information, not only just from how to acquire power at very low rates or, some strategies or techniques to get there, but now you're talking about the other side is once I've got the great power, once I'm mining coin, now what do I do? Now what's the best thing to do? So please continue with that. I'm very excited.
Right. So when part of the taxes is actually picking the right location, picking the right type of business structure for you. And it really depends on what your goals are. So if an accountant talks to you and says, I knew somebody that was opening up a farm and their accountant told them to put the land in a corporation and then create like a pass-through entity for the operation. And me personally, I would have done that exactly the opposite way because I'd want the land in an LLC because it offers protection, and then I'd want it owned by the corporation. So I have a dead stop of my income. And,
So when you're saying corporation, you're talking like an Inc., like an S
C corporation, not an S corporation.
Yeah,
like
a C corp. Yeah.
Yeah.
Right.
And
because
so
your
strategy is to have the LLC owned by the C corp. Exactly.
And every state I operate in will have a parent C corp, and then it will be held by a holding company, in another location. And part of the reason for that is like Bank of America. Every state that they operate in and every country that they operate in, they have a separate corporation because that way everything is compartmentalized to them. So if you're mining in Spain, what you're doing in Spain is going to stay in Spain. If you're mining in Canada, what you're doing in Canada is going to stay in Canada.
Would it be safe to say that if you're mining in Las Vegas, everything stays in Las Vegas?
Probably. That's probably pretty accurate.
Right.
I helped a business in Vegas. They have a large operation that needs to be temperature controlled. And during the nighttime, the temperature can drop. So I helped them put in S17s to heat their place. Now their place has air conditioning most of the other time, which is great for the S17s because now, you pump the stuff coming from their operation back through there to output the hot air. And then you vent that through the ceiling when you don't need to be reutilizing it in the business. And it just basically saved them about $1,000 a month just from not having to pay the electrical bill to run the heater at night and the gas bill. And so that's pretty big. Plus they're making money because they're using S17s,
Sure.
right? They're still making money. So to them, it was a smart business move. I mean, they had sub 3 cent power already because of the amount of power they use. And so it was a really good fit for them, and they're very happy with that stuff. And that's just part of the things, look at this business uniquely. But I mean, with a business structure, every business structure should be what you need it to be, whatever that may be. But, you have to look at what your goals are, what you're trying to accomplish, how you want the money shown on your personal income taxes and that type of stuff. The next thing that I talk about would be taxes. And most people don't really understand taxes for mining. Okay. And mining,
absolutely. Yeah.
I don't understand.
I have no idea. Yeah. But please help us. Give us a 101, a really quick 101 if you can.
So when it comes to mining, at the minute it's mined, not when you take possession of it, not when it transfers to your wallet or anything, but at the instant it's created, it's counted as income. So if Bitcoin is at $10,000 at that time frame, you have to recognize $10,000 of Bitcoin. Let's say you just made a Bitcoin. Okay. So, you have to recognize $10,000 of income. Now, the basis in that coin is that same $10,000 is what the value of it when at the point that it was mined. Okay.
Okay. And what you're referring to, just to kind of narrow this down, is if we're all mining and we're all, doing a pool, we would have to track down what block our coin was generated from. And then, based off the timestamp of that block and what Bitcoin was worth at that time, that's what we would determine the value of that coin that we would then eventually receive into our wallet.
Yes. And it's there's multiple ways that you can handle that. And that's why, talk to an accounting professional, talk to a tax attorney, and come up with something that will be acceptable. Because the idea behind the IRS or any government tax agency is they just want you to pay the right amount of tax.
Sure.
They don't care what that is, as long as it's right, as long as you follow the rules, they're good with it. They may ask you questions, but answer them. As long as you're good, you're fine. They're just gonna, say,
make
okay,
your best effort to respect, how their system works, and that you're trying to be cooperative with it.
Right.
Okay.
So mining is the creation of the coin, and that's why it's brought into income at the point that it's created. The second after it's created, it's now property.
Okay.
Okay. So it has a $10,000 value of the property. That's how much you have into it. Since this is a business, you have the income of, now you can do all your business expenses, your employees, your capex, the cost of your miners, the depreciation. There's accelerated, you can, instead of depreciate things, you can do what's called a IRC 179, which allows you to expense out an item in a year that's something that's supposed to be done over time. There are certain rules. There's also, you can pick an inventory method, LIFO or FIFO, first in, first out, or last in, first out. And that can have a dramatic effect on your taxes when you're selling your coins and stuff like that. So, there's a whole bunch of decisions.
Is that something that you really just have to do once a year? Like, you just have to decide, okay, this year I'm going to count it like this, and then next year I might do it the opposite?
Well, LIFO and FIFO is an election you make, and then after you make it, you have to request an accounting change if you want to change it. And then you may have
you're going to stick with one way or the other, or go through a process to switch.
Right. Whereas the depreciation method, once you expense it out, you can't depreciate it. So it's pretty much over. If you decide to depreciate it, you're stuck with depreciating it. But the 179 where you expense it out is basically on new purchases, new assets that you bring in. You can decide, okay, let me expense them out. And that will all have an effect on your bottom line tax effect. Now, one of the interesting things is the IRS recently changed some reporting. And so there's now a question about, if you have crypto, on the return.
Yeah.
And, so this year, you probably had it last year. You probably had it the year before that. You probably had it the year before that. Yeah,
I've noticed that everybody who answers yes to that question immediately gets an audit or a request for audit.
Oh, no, it's not like that. They're not going to go after the small people. They have quotas, or if you want to call it quotas, but they're going after the people that they're going to make money on. They may go after smaller guys to set example, but if you're $5,000 a year, they're probably not going to go after you.
Now is this? I have a question here.
Yeah.
What's the difference between the government asking you as a person if you own or bought crypto versus asking a company? Are they asking companies, or only are they asking individuals?
It's everybody, and
it's everybody.
But see, that's not. They're probably not going to come after you for taxes on that. They're going to try to get you on other areas, because after 9/11,
illegal,
Form 114. And so there's a question on the return that asks, at any time, did you have financial interest or signatory over a financial account, such as a bank account, securities account, brokerage account, located in a foreign country. And you know what? Most of the people who were on Binance or Yobit or any of these other things that had an account, even if they had $1 in crypto on it, should have answered yes to that question. You know?
Yeah.
And then they had to file additional forms. They had to file the FinCEN form 114, and then they also had to file IRS form 8938. You know, and so they're basically anti-money laundering forms.
Yeah.
And so if you answered no, which most people answer no, right? Because they don't necessarily
they gotcha.
brokerage account, you know, that type of stuff.
Yeah.
They're going to come after you on those things because there's a $10,000 penalty per account per year.
Oh, wow.
For each form.
Wow.
So if you didn't do that this year, you can get, you know, let's say you only had one account. That's a $20,000 penalty. If you didn't do it,
okay, you're scaring us to death here, Kevin. Can I ask you a question? Let's say we've all realized now that we had $1 here or there somewhere in the cryptoverse. Can we go back and amend our returns and put these proper forms in and avoid these penalties?
Yeah.
Is there any saving grace we can do?
For the feds, they have a tax amnesty program that you can go ahead and utilize. And so, you know, seek out a professional that can file a tax amnesty thing, file the proper forms and everything else as far back. A crypto tax return is 6 years as long as you reported it properly. If you didn't report it, there's no statute of limitation on it. They can come get you 20 years from now if they want to.
Whoa.
You know, and not only can they hit you with the penalties, then there's interest.
The interest and and
it just becomes real ugly. So if you made a mistake and didn't answer that stuff, it's not the end of the world. I mean, voluntary compliance, that's their goal. That's why they
voluntary compliance,
right?
Yes.
You know, and so
as long as you show you're making your best efforts to do the right things, they tend to be very forgiving. But if you show that you knew that there was a better way, but you didn't do it, that's when they come after you like,
right. Well, I mean, it's easy money for them, right?
Yeah.
You know, Kevin, if you do it one time, it's $20,000 and they don't have to do anything. Oh, you didn't fill out this form. This form here.
It's a slam dunk.
Right.
In our last 2 minutes here in this podcast episode, what else do you want to share with us?
There's a whole bunch of tax incentives that you can get by picking locations. So I'll give a brief example. I did an analysis between Illinois and Texas, and $1.2 million investment into each, around $450,000 worth of income, that taxable income. Just the difference between the two states over 2 years. Texas, you made $84,000 more than you did in Illinois. Now, if you add in the new markets tax credit, which is up to 39% of your investment, that means it would be, let's say it's in Texas, now you're at $200,000 or $100,000 a year more. So picking a site is about, the state and local tax differences and that type of stuff. It's about, finding, where has the best incentives for you and different things like that.
It almost seems to me like it's coupon hunting. Like you're looking through all the different, store coupons to find the best value. You can get the biggest bang for your buck, or you can get, So I mean,
the business still comes down to the basic thing. The biggest driver and the biggest input is your cost of power. Having that as low as possible will make you the most money. But now you have secondary you can consider, which is, the location. Are there credits available? What other incentives do the local city and government have? They could give you, free loans. They could, instead
zero
of
interest.
One of the offers that they offered me was I could get 2 acres of land is located, a 5 megawatt substation is located on the property, and I could lease it for $100 a year for 5 years.
Wow.
Instead of spending $50,000 on the land, they would lease it, they would lease it to me for $100 a year because they own the property.
Right.
So that's a pretty big incentive. But you have to look at these things. I think the thing that I'd want to stress is a lot of people in this industry, collaboration is very big, but most people's idea of collaboration is you bring me a deal and I'll tell you if I want to participate, or
Sure.
they say, this is what I want. Do you want part of it? Right. And that's not really collaboration. Now,
Absolutely.
if the mining community got together and they wanted to get the cheapest power possible, let's form a cooperative. Let's do the other stuff. Let's be able to go in and say, we need 100 megawatts of power, or we need a gigawatt of power. And then we find the land, do the other stuff, bring everybody in, make sure there's a cushion, and the cooperative can go out and expand, when we need more power and that type of stuff. Yeah. But now this can be used for other things. Okay. Scott, you're involved in, I believe, an ASIC manufacturer in the US, or you have some ties with one.
Yeah. You can say that.
Those people that have, a gigawatt of power, as a cooperative, from saying, screw Bitmain, let's go over and we raised $10 million or $20 million. Let's do our own mining ASIC manufacturing. Let's do our own tape out. We'll buy our own machines and we'll make the money instead of giving them the money.
You are singing my tune, Kevin.
Well, I mean, it's the common thing, but everybody's out to make their own money. It's all about them. It's not about what's for the greater good. It's not about,
absolutely.
It's all about the almighty dollar, and greed kills pretty much every deal that doesn't get done. It's all about greed.
Yeah,
and so you're saying it's really about the economy of scale, and if you can cooperate together, and maybe one guy is using 2 megawatts, another guy's using half a megawatt, you can put that all together and come up with this minimum so that you can then get the cheaper power.
Exactly.
And working together. Yeah.
Right,
Kevin.
Well,
this is as always. This is absolutely fascinating, man. I want you now to let our audience know what is the best way to get in touch with you, because you've let it known to us that you can talk about these things privately, one-on-one with people if they have more questions. And I'd like to open up that opportunity for people to be able to connect with you. Maybe they want to be a part of this cooperative. So how can people reach out to you and get this started?
That they can email me. My email address is photocrazy. It's spelled differently, so it's FOTO, and it's RAZY at yahoo.com.
Okay.
With Telegram, I'm at Pez People, and that's a long story about how I got Pez People.
Right.
It was just a unique way. Does that make sense? I came up with something that nobody else was going to use ever.
Right.
I've had it for 25 plus years.
Oh, wow. Nice. So that's been a long-term handle.
Right. And so it's one of those things.
Well, Kevin, thanks a lot for joining us, and we look forward to speaking with you some more. We'll see you on Telegram.
Yeah, definitely, Kevin. We must have you back. All right, you must come back. We must continue this conversation. Unfortunately, we've kind of run out of time for today, but awesome, man. Yeah, I really look forward to seeing you.
Take care.
Take care. Bye.
Take care. Have a nice day.